meetings, at which more policies and measures to support the economy will come out. 陈彤 CGTN 上海。
Let's talk to Marc Ostwald, who's Chief Economist and Global Strategist with ADM Investor Services International. Good to see you, Marc. Look, there are high hopes for China reopening and what that's going to mean for global markets, but is it a sure thing?
It's not really a question of whether it's a sure thing. It's a question of actually understanding that the picture is going to be also one which is a little bit stop-start. There is obviously pent-up demand there. There's no question about it. If one looks at some of the tourism figures, particularly hotel bookings, box office revenues, both of those are now above 2019 levels. And one does have to take a little bit into account anything which is a year-on-year measures, is comparison with 2022, which was a disaster in terms of Lunar New Year. So there are positive stories around. But I still think if one looks particularly at the budget data which came out of China today, you could see just how much damage is still being done by the property sector. Land sales revenues for local authorities were down over 23% year on year. That makes a big hole in budgets. And it's to be hoped that with less spending on COVID control measures, yes, things will pick up. But solving the property part of this equation, which is also going to be driving a lot of demand for commodities, because that's a key part of the demand for property, is still a major issue in all of this. So we'll have to see what measures are announced as part of this plan to boost consumption.
So what are traders pinning their hopes on? Is it commodities, like you say? Is it tech stocks? Something else?
It's basically hoping that private consumption in China really does see a marked boost. I mean, really, since the start of COVID, and even after the recovery, retail sales have been running about, even before the shutdowns at the back end of last year, around about 4%. Now, you would expect them to be really running closer to the 8-9% area. And part of that is also, again, related to the property sector. It always seems to come back. Someone I was speaking to in China just the other day basically said, look, confidence has been damaged by what's happened in the property sector, and it's not going to come back necessarily in that much of a hurry. But as I think as gradually things return to a more normal way of life without the incessant interruptions, then that confidence will, the memories of COVID will start to fade, and that will obviously boost consumption. So I think that's the biggest positive of all.
Well, we are seeing lots of sectors ticking higher. I mean, one big exception to this reopening rally, if you like, seems to be pork. The spot price of that has fallen about 50% since Beijing began relaxing COVID restrictions. So what's all that about?
Part of that is actually because we've been through some brutal ups and downs in terms of the pig herd in China and indeed around the world. So I think that probably is nothing more than continued volatility. Part of it is also because for a lot of people, they have basically migrated some of their consumption patterns. So it will be interesting to see, with more people going out to restaurants and to hotels, whether there is a pickup as a result of that.